Thanksgiving is over. Christmas is next. It's a season of out with the old, in with the new, about generosity, love, and warmth. And today, this episode is going to be a bit of a quickie. But I've decided to make a change as far as this series goes. So as you guys... What's up, Siri?
Sorry, I didn't quite catch that.
I've decided to switch to TD Ameritrade for the rest of the series. And don't leave. I know all you guys are going to be like, oh God, I've been following this just for Robinhood. But first, I just want to explain why I'm doing it to begin with. And it's because I've been doing all my technical analysis and stuff on Thinkorswim. And I figure I might as well just consolidate everything onto one platform. I don't mind using Thinkorswim now that it's basically commissions free. So I'm going to be entering my trades on there. It just makes it easier for me. But for you, really, the series hasn't changed because all I've ever done is shown my technical analysis on Thinkorswim. I haven't even shown myself really entering the trades on Robinhood. So for you, nothing changes. You can do the exact same thing on Robinhood, and I will continue to do Robinhood tutorials and all that kind of stuff. I still left money in Robinhood. Still love it. There's probably some awesome stuff to come. So there's still money in this. Just letting you know for the rest of the series, I'm probably gonna be using Thinkorswim to actually enter my trades. But for Robinhood users, you're going to see it just the same as you've always seen it. And then on top of that, if you decide, hey, I kind of like the idea of switching to TD Ameritrade, I've also made a tutorial that will be released with this video. So you'll see them both released at the same time if you go to my channel. That explains exactly how to use Thinkorswim from a perspective of a Robinhood user in case you do want to switch with me and use TD Ameritrade's platform. So really all that's changing for you is that when I show my profit loss graph, it won't be on Robinhood, it'll be on TD Ameritrade's website. So don't panic, I love you guys. I hope you get where I'm coming from. It's just easier for me to trade on there. If I'm gonna do all my technical analysis, might as well just enter it where I'm doing my TA at. Plus they allow short selling, so that's a really big bonus on top of that. So with that housekeeping out of the way, let's go ahead and take a look at a few stocks I'm looking at this upcoming week. So in the top left, you can see my balance, 2,800 roughly, is the same as where I left it on the last episode. So I've been waiting to release both these videos at the same time, waiting until I had enough time to do both of them, so that you guys could have this fresh start with me and also have a tutorial in case you want to join me on this platform. So we're right where we left off last time. We have no open trades. I haven't traded anything on this yet, so we're just gonna take a peek around and see what we can maybe trade in this upcoming week. So I'm looking at a few stocks. One I'm looking at is NTNX. Would have been nice to catch this earlier on. You can see an inverse head and shoulders down here, where this is one shoulder, another head, and another shoulder there. But even still, even if I caught it earlier, that would have been great. But even still, the real break above this neckline here is going to be right there with that large volume, so within the last few days. And you can see it has had a lot of volume on earnings and continues to have very high volume. And I just want to capitalize on this explosive move to the upside. It's broken above the 200-day moving average and is riding above the 9 exponential moving average. This is a little bit of a speculative play because I know it is overbought on the RSI. This could just be a push up on earnings and people can come in and start taking profits. However, I know the stock is extremely volatile, so I know it has potential to push up even further, even if it does start showing an overbought signal. On top of this, it did gap up on earnings, so it could easily turn back around and fill that gap or close that gap. I just picture this gap over here as a much more favorable gap to close considering its explosive move to the upside and it hasn't been filled yet, and it's a much, much larger gap. So if this goes down and fills this gap, it's no big deal. It's not that, I'd lose a few bucks essentially. Our next one is going to be CHGG, which is Chegg. It's a study platform where most people pay to cheat and has served some people well throughout college. What I really like about this stock is it looks like it's continuing its primary bullish trend. So you can see back here in the past for a long, long time, it's been in a very strong bullish trend. Recently, it's taken quite a big dip, but it looks like it's continuing its bullish trend here. As you can see, it's starting to show higher highs and higher lows. There's one low, there's a higher low, higher low, higher low, continuing to show higher highs. And I don't view this as a secondary bullish trend to this primary bearish trend. I consider this a continuation of its primary bullish trend. So I'm thinking of probably opening a bull call spread on this guy. So with this bull call spread, I'm going to choose an expiration that's pretty far out in the future, probably keeping it around at the money. I don't want to do something with the near-term expiration because it could easily do a correction. You see that the MACD does look pretty overextended. It's had a nice bullish run up. It could drop back down pretty quickly. So if I'm going to do a bull call spread, I'm going to have it pretty far out in the future as far as expiration goes. And then if I'm doing a position in shares, I'll definitely give it some wiggle room to breathe as far as where I put my stop loss. Still risking only like 2 to 5% of my portfolio, probably more like 1 to 2% of my portfolio. But definitely want to give it some wiggle room in case it does decide to come back and correct a little bit. So if you want to take a look at the weekly This is more the image I'm getting from the daily chart here. You can see the cross on the MACD, which is indicating a buy signal. You can see the 200, 100, and 50-day moving averages are heading in the upwards direction, not crossing over each other. So it has this long-term bullish trend. So that's kind of what I'm getting at when I'm looking at the daily chart. When you go down to the daily chart, you're going to see a lot more information. It's going to be a little bit more noisy, lines crossing over each other, RSIs overbought, all that jazz. But if you kind of fuzzy it all out and take a look at the weekly chart, you can see that the bullish trend is very strong and likely to continue. So if I'm going to buy into this, it's going to be a little bit more long-term, probably at least a few months. Chegg. What's the name? Who came up with that name? I don't know what that means. Probably because it's close to chug and it's for college students. That would make sense. So I'll probably enter those trades tomorrow. It's Sunday, so I'll enter them tomorrow when the markets are open. And then I'll let you guys know in the next episode how things have panned out as far as those trades went.